FHA loans suck. If you've been shopping for a home, there's a good chance you've probably heard or read stuff online by some internet guru that tells you how bad FHA loans are and why you shouldn't use one. Well, I'm going to address that in today's video. We're going to discuss the pros and cons of FHA loans. So if you're thinking about getting a mortgage and you've been looking at an FHA loan, stay tuned. Hey, what's up everyone? It's Channing, the broker owner of Bayou Mortgage, and in today's video, we're going to talk pros and cons of FHA loans. Man, it is far too often that I hear how bad FHA loans are, that you shouldn't get one, that you shouldn't even buy a house if you don't have 20% down, that you should get a 15-year mortgage only, and on and on and on and on. And people just talk so much, and they have so little understanding of how any of this works. So please, if you've been misinformed, listen to this, make the conclusion for yourself, and help you so I can help you understand which loan program is going to be best for you. So let's talk about pros and cons of FHA loans. The first pro of getting an FHA loan is that they allow for much lower credit scores. If you've got a credit score under 680 and you want to get a conventional loan, good luck. If you don't have at least 20% down or something good, large chunk of change sitting around, it's going to be hard for you to get a conventional loan. Even though they say their minimum credit score is 620, you're going to find that getting an approval on that loan is going to be difficult using a conventional loan. Whereas with FHA loans, they're going to go down to a 580 credit score all day long, 3.5% down. Now, you get under 620, there's a chance you could need reserves. You might need 1 month's reserves, 2 months reserves, 3 months reserves in order to get an approval. But even if you can't, FHA has manual approval processes as well, which you typically do not get on a conventional loan. And so we've got other videos. I'll post them to what reserves are, what manual underwriting is. I don't want to jump into that today, but just know that one of the best pros about FHA loans is they accept lower credit scores and worse credit history. So without FHA, if you had anything typically under 680, you're going to find it very difficult to get a loan, but thankfully we have FHA. The second pro of an FHA loan is that it, in spite of it being geared for lower credit score buyers, it still has a low down payment requirement. You only need 3.5% as long as you have a 580 credit score or higher. With conventional loans, they do have a 3% program if you are a first-time home buyer or if you are low income, but it's still more difficult to qualify for. And typically, if you're not a first-time home buyer, you're going to need 5% down or more. An FHA loan doesn't have a first-time home buyer requirement, even though it's commonly referred to as a first-time home buyer program. So the second pro of an FHA loan is that it has a low down payment. It makes it flexible to buy a home. All right, the next pro about FHA loans is that you can use gift funds. Now, to be fair, you can use gift funds across any loan program, but with FHA, because the down payment requirement is so low, you can use gift funds from friends and family if they're willing to give that to you and they're willing to provide a bank statement showing that they had the money. You can use gift funds in order to purchase a home, and they're going to allow you to use that towards your down payment, not just your closing costs. Another pro of FHA loans is that the seller can pay your closing costs. So with conventional loans, you're typically limited to about 3% of the purchase price in seller concessions, which if you're buying a cheaper house may not be enough to cover all your closing costs. But with FHA, you can get 6% of that purchase price credited back to you from the seller to pay your closing costs. And honestly, you may have never thought of this, but it's way more common than you may realize to have the seller cover the buyer's closing costs. So with FHA, you can get up to 6%, which is usually way more than you're ever going to need. One of my next and the final favorite pro about FHA loans is that you can have a co-borrower on an FHA loan and they don't have to live there. We call this a non-occupying co-borrower. So if your dad or mom or a family member wants to co-sign on the loan for you because you may not have enough income on your own to qualify, then you can actually use them as a co-borrower. They don't have to live in the house. They can be a non-occupying co-borrower and still help you get the loan. So this is a list, guys, of my favorite pros when it comes to FHA loans. I think it's fantastic that they make it so easy and so flexible to promote home ownership in America. That's what the program was created for, to make it so that the average person could get a house and they didn't have to wait until they saved 20% down and all these other things that we see with conventional loans. Not that you need 20% down with conventional, but it's a lot easier to get qualified with FHA. In fact, many lenders will base your initial pre-approval on FHA and then go from there if you can do conventional or if it makes more sense to do conventional. So those are the pros of the FHA loan. Let's talk about the main 3 cons to an FHA loan. And we hear a lot about them, but honestly, guys, I think it's just overblown. So the first con, and this is not the biggest one, but the first con is that they do have a lower loan limit than conventional. So if a conventional loan limit is $600,000, FHA might be $400,000, and they change every year. So that's why I'm just giving you a vague number. You can go and research this on your own, but the deal is you cannot get as big or as expensive as a house as you could get with a conventional loan. But the type of client that is typically using an FHA loan is someone who's not trying to buy a $500,000 house or $1 million house. This is someone that's a first-time home buyer or a second-time home buyer, and they're not, maybe they're medium to moderate income family. You're not trying to get $1 million house. But that is one of the cons, is that it does have a lower loan limit, so you cannot finance as much with FHA that you could with conventional. Now, the second, and this is probably one of the biggest ones, is that FHA has what's known as upfront mortgage insurance. It's probably good to just look at this as like a funding fee. So what FHA does is they take 1.75% of your loan amount, and then it's rolled into the loan. So this can be several $1,000s that gets rolled into your loan that you then have to pay off. And while I agree that that money isn't super beneficial to you directly, this money does fund the FHA loan program. So as people pay on their mortgages and pay off their mortgages, this money funds FHA so that they can continue to insure these loans to make it possible for people with less than perfect credit, without huge down payments, to continue to be able to buy a home. And so it is a con, but it is a necessary con because it's what keeps the program growing. Now remember, FHA does not give loans. They do not set interest rates. They do not do anything. They simply insure the loans for the lender. They tell the lender that if you default on the loan, they will pay them back X amount, and that's what makes all this stuff possible. The final issue that people take with FHA loans is that they have permanent PMI. It used to not be this way. There's ways around it now if you put 10% down, which most people aren't going to do. But for all intents and purposes, if you get an FHA loan, the PMI on that FHA loan, the private mortgage insurance, the money that you're going to pay every single month to the bank for the protection, for their protection in case you default on the loan, does not go away on FHA loan. But let me tell you that if you are under 700, the cost of that PMI is going to be factored into the loan, but your payment is still probably cheaper than, say, a conventional loan that would probably also have PMI. So yes, it's permanent, but the loan is still going to be cheaper. And if your credit improves later, or your house increases in value, which happens for most people, you can just refinance into a conventional loan. Most people don't stay in their house but for 5 to 7 years anyways. So please keep all of that in mind. While we get irritated with PMI and we don't like to pay it, remember it's these charges that make home buying possible for so many. Otherwise, you'd have to wait until you can save 20% down. And we know that saving for a down payment is the #1 obstacle to home ownership. Could you imagine, with how difficult it is to get 3.5% down, how much longer people would have to wait if they had to do 20? So keep that in mind. Yes, there's cons to FHA, but do FHA loans suck? Can you answer that question that I asked at the beginning of this? I don't think they do. We do a ton of them, and I'm grateful to have such a program that allows us to help put so many people in homes in America, because we believe that home ownership is key to building wealth for your future. Hey, if you liked this video, please like it. Please drop a comment, ask us a question. I'd love to engage with you. If you like our videos, please subscribe to the channel. And as always, we will see you guys back on the next video. I look forward to seeing you. Talk to you next time.